This is Pat Walker at Mission Winners doing a video review of some of the leading stocks in the leading groups. One of the things I'm really big on, and it works, is focusing on leading groups and leading stocks in those groups. I have about 10 different screens that I run with such constraints as great earnings or great sales, composite rating of 90 in leading groups within 15 to 20% of 52-week highs, no low price stocks and no thin stocks. And these are things that I've developed over 30 years, and it works. It works. It keeps me focused on where the money, the big money, can be made, and it also keeps me away from the junk. So I'd like to show you something here. These are stocks. These are leading groups, the leading groups right now that I ran. I ran a screen on MarketSmith with stocks with a high composite rating within 15% of 52-week highs, no low price stocks, and it comes up with a list of stocks. These are the leading groups right here. With the stocks in the top 10 groups, you can see there's not a lot there. I want to show you something right here. First stock on the list is MASI, Massey. It's in the Medical Systems Equipment Group. I'm going to show this again. There it is. And you can see it's going sideways. MASI, by the way, has a composite rating of 99. 99. That's the best you can get, forming a relatively small shelf right here. Let's continue onward. Here's DXCM. See how this picked up right here? DXCM. It's in a great group, composite rating 98. Last quarter's earnings up 261%. Last quarter's revenues up 49%. Again, composite rating of 98, and relative strength is leading the stock at a new high ground. See where this started to break out on Friday? What do you think held this thing back? The market. The market. If the market straightens up, there's potential this could lead. Am I saying it's going to? No, but it has the characteristics we look for. They're looking for a 294% increase in earnings this year over last year, or this year over the previous year, fiscal year 2019, by the way. That's huge, just for what it's worth. Let's continue onward. MSI Solutions, telecom consumer products, going sideways. You can say, I don't really see much here. One of the things I like to teach is not only look at the daily charts, look at the weekly charts. Check this out. Now what do you see? And I'll refresh this for you. Now look at this base right here. See how different it looks? Go back to the daily. Can it take across these tops right here? Sure it can. It's in a top group. Top group. Leading groups, leading stocks. Ring Central. Leading group. Composite rating 99. Earnings per share rank 94. Relative strength 97. Leading the stock at a new high ground. It's just marching up. Now, there was a break here. Is there a low risk entry here, folks? Right in here. Is there? No, there's not. So until it does present one, I encourage you, wait for that to happen. Don't just buy blindly because it could reverse down and I have a loss. Always focus on great stocks, great groups, and a good chart pattern. If it's extended, wait. Have the discipline to wait. Next stock on the list, Paylocity. I like this Paylocity. We own this from down here, right in here. Composite rating 99. Last quarter's earnings up 80%. These are the things we look for, and these are the things we shared with our members. Look at the volume surge right here, folks. I'm going to do something for you. See that nice clean shelf? It was on the list because it was on this shelf in a leading group. Nice clean base. Boom. People talk with their mouths and vote with their pocketbooks. Guess what? They voted. There you go. And what do we have now? This. Another shelf is forming. Rising earnings estimates. By the way, Relative strength is leading the stock into new high ground, even though price is lower here than here. That's power. Watch for that base. And again, we own it. We're looking to buy more in a good market, by the way, okay? The M and mission winners comes first, the market. You can have the best stock, but I'll tell you, if the market's not doing good, you're fighting an uphill battle. Just have the discipline to wait. No penalty to wait for your pitches. Next stock on the list, PAYC. Looks good here. Little shelf going on here. Has earnings in 4 days. Composite rating 99. Earnings per share rate 98. Relative strength 97. This looks good. Let's see what it can do if it forms a shelf here and takes off. Is there a safe entry here? Not right now. Another stock on the list, Now. ServiceNow. Gaps up on earnings. Is there a safe entry here? No, there's not. Wait for that safe entry. Maybe it'll take a couple of days and it forms a pennant and it'll go. But remember, don't forget the market. Next stock on the list, CDLX. Again, these are leading groups. Leading stocks, leading groups. There aren't many on the list. Why? Why aren't there many on the list? Because there's not a lot of great stock action right now. That's it. CDLX, Cardlytics. Earnings per share ranked 62. Relative strength ranked 99. Composite rating 93. Last quarter's earnings up 120%. Last quarter's sales up 63%. These are the things we look for. Nice little shelf right here. Nice little shelf. Next stock on the list, DocuSign, DOCU. Great group. Last quarter's earnings up 999%. You can't get better than that. Last quarter sales up 40%. Looks good. Relative strength 95, leading into new high ground. Is there a clean entry here, folks? No, there's not. And that's okay. Wait for it to set up for you. And then finally, we've got DT right here. Dynatrace. Gaps up right here on earnings. Last quarter's earnings up 900%. But look at the base, or look at the spot right here. Is there a clean entry spot right here? A safe entry spot? No. Give it a couple of days and hopefully a better market, and it will present itself. Anyway, I wanted to share that with you for everybody. I always like to take a look at the leading groups and the leading stocks in those groups. And as you can tell, last week we had about 25 stocks. This week we don't have as many. Why not? The market's sloppy. Don't argue with it. The market rules. We just get in line with it. And I thank you very much.